Good morning. My name is Matt Klukas, and I'm the President and CEO of Criterium Energy. This morning, I will be giving a brief update and some commentary on our recently released Q3 2025 operating and financial update. You can find more information on this in the press release and presentation released on November 20th, 2025. I will be making forward-looking statements, so please note this disclaimer, which is also available on our website on our presentations. Please note also that all dollar amounts in this presentation are expressed in US dollars unless explicitly stated otherwise. Today, we will focus on updates in both the Tungkal PSC and the Bulu PSC. In the Tungkal PSC, which we own and operate 100%, and we produce just under 1,000 barrels a day of oil. And this year, we have been focused on the active development of a series of gas fields which surround our oil fields. These are specifically Southeast Mengope and North Mengope. And earlier this summer, we successfully tested both of those fields. And in Q3, have been progressing commercial contracts, which will pave the way to first gas in 2026. In the Bulu PSC, we own a 42.5% non-operated interest. Here, we've breathed new life into the asset and are playing a more active role in the joint venture. This is signaled by the signing of an MOU, which will gain us access to a pipeline, an underutilized pipeline, which will allow us to lead eventually to the successful development of the Lango gas field. Let's touch on the highlights from Q3 2025. As I mentioned, there's a very clear path to Southeast Mengope first gas. We've reduced total project capital to $2 to $3 million from an initial investment of $3 to $5 million, or an initial estimate of $3 to $5 million. The majority of these costs have been spent to date, and the remaining costs really surround land acquisition and pipeline contingencies. The remainder of this is to be funded with cash on our balance sheets and from operating cash flow. This pipeline construction, which is really the critical element in bringing first gas to Southeast Mengope, will commence in early 2026, and we're excited to announce the partnership with Draydoff Indonesia. They're an expert in onshore and offshore pipeline construction, and we've been very pleased to date with our interactions and working with them. In this arrangement, they will fund construction of the pipeline, and we will pay a monthly access fee upon first gas. In the Bulu PSC, we're focused on increasing shareholder value, and as I mentioned, by playing an active role in the Lango development. By signing the MOU with the KJG pipeline, which is located conveniently about 25 kilometers away, this allows us to progress our development plan while also maintaining optionality amidst the transaction delay, which we had announced back in May of 2024. And finally, despite lower oil prices, we continue to generate positive operating cash flow in Q3 2025. This is just a reminder and a reinforcement of our focus on cost reduction and operating efficiencies. Now let's focus on the gas within the Tungkal PSC, specifically Southeast Mengope and North Mengope. I'll provide a brief overview of the project summary, and then we'll talk specifically about Southeast Mengope and a bit of an introduction on North Mengope, as that's something we haven't discussed much about in the past. Our Tungkal PSC contains 4 gas discoveries: Southeast Mengope, North Mengope, Machan Gadang, and Chera. 3 of these have been successfully tested. The first, Southeast Mengope, which we've performed an extended flow test in August of this year and tested between 7 and 8 million cubic feet a day with an estimated 2C recovery of 15 BCF. The first stage in this development is to build a pipeline from Southeast Mengope into the nearby gas plant, which has enough capacity to take both Southeast Mengope and North Mengope volumes. This will then be transported up to the TGI sales point. Here, we like to say we're in a very good area for gas infrastructure and for gas demand, as we have access to both markets in Java, North Sumatra, and even an option to export to Singapore if the option presents itself. Southeast Mangope, a critical step was taken in this summer. We were able to prove that we could produce from the existing well, hence, and that was largely what resulted in our decreased capital estimate, was being able to utilize the existing well that was drilled back in 2001. Upon the successful completion of Southeast Mangope and the building of this pipeline, we'll then turn our attention north and construct another pipeline to North Mangope. In North Mangope, we tested this in July of 2025 at around 2.5 million cubic feet a day. This pipeline will also connect most of the well pads within our Mangope oil field. There is associated gas in Mangope, and there are some zones in Mangope that have shown gas or gas potential. So this will allow us to essentially pick up these volumes along the way from North Mangope to South Mangope, and ultimately egress to the sales market here. This is our phase one, Southeast Mangope and North Mangope. After, we'll turn our attention to Machangadang and Chera. Machangadang has had a successful well test back when it was drilled at 5 million cubic feet a day. Chera has not been tested, but has encountered significant gas during drilling back in 2008. Focusing in on Southeast Mangope, what is the pathway to first gas? And I can't stress this enough. We're looking at really a no complexity solution here. We're using the existing well and producing via existing facilities, with the exception of the pipeline that needs to be built. We're targeting first gas of 5 to 7 million cubic feet a day in the first half of 2026, with most of that capital net to Criterium spent to date already. When you look at the pathway, we're in progress finalizing the pipeline and facility agreements. We're in progress in the heads of agreement and the binding gas sales agreement. And then this will lead to the construction of the 14-kilometer pipeline to the nearby facility. Our project costs, as you can see, majority of this was spent on the re-entry of Southeast Mangope, and the remaining in the green here has to really run with community engagement and land with regards to the pipeline. And we've built in some contingencies as well, should pipeline costs go over. We have been very, very pleased with our relationship with Draydoff Indonesia to date. And our team is working diligently and focused solely on the development of Southeast Mangope and bringing that to first gas. With the completion of Southeast Mangope, we'll turn our attention to North Mangope. On the right here, you can see the Mangope oil field. To the north of it, in this blue box, is North Mangope. These are 4 wells that were drilled, initially targeting oil, but were shut in 2014 due to high gas production and the inability to produce that due to lack of infrastructure. In July of this year, we successfully re-entered Mangope 20, which is one of the 4 wells, and produced 2.5 million cubic feet a day with associated oil production. It is important to note that only one of a potential 4 potential gas-bearing zones were tested during this. We'll execute a similar development plan to Southeast Mangope, where we will produce from existing wells. We will transport via a new pipeline, and as I mentioned, that will touch and connect with many of our well pads and our central processing facility in the Mangope field. And also importantly, the gas will be sold within the same gas sales agreement. So the gas sales agreement we are looking to sign with Southeast Mangope will also cover the volumes of North Mangope. This allows us to really streamline the development and any approvals needed. Our pathway to development is also clear. We're in the process of testing the remaining zones to understand the full potential, which will determine the size of the pipeline needed to connect to our egress into the demand market. And ultimately, we forecast less than $1 million capex net to Criterium required to tie in this asset. Now let's talk about Bulu. We're breathing new life into the project. As a reminder, This is a large offshore gas field, 134 BCF net to Criterium's 42.5% interest. And it shares similar characteristics to our gas fields onshore in that it is just fully appraised. We have successful well tests in the wells, and we are bringing a unique and innovative development plan, which allows us to reduce CapEx by utilizing infrastructure that has incremental capacity or extra capacity in it. A key element of our development plan is connecting the Lango field, which you see here, with this KJG pipeline. This is only a 25-kilometer build, and this pipeline ties into demand centers and power generations in Semarang, and also connects us into East Java as well. Now, West Java, there is a new pipeline being built that will also connect to West Java. So again, we're in a very good area code, postal code when it comes to gas development and being near demand centers. The MOU we signed with KJG really helps validate our development. It's a very important step in accessing this pipeline, and it's a shared commitment for long-term gas infrastructure project. So what we've done here is we're scaling the strong reputation we've built within Total in taking these, what was once thought to be stranded gas fields, and bringing them to market. And now we're doing that same thing with Bulu, collaborating with the current operator and pursuing this revised development plan using the KJG pipeline. So our outlook. We're set to diversify and double production within the first half of 2026. Our immediate focus remains on Southeast Mangope, adding 5 to 7 million cubic feet a day production. We're finalizing the commercial agreements, and we'll look to commence the pipeline construction in early 2026. I'll reiterate, we intend to fully fund this through our internally generated cash flow and cash on our balance sheet. There's more gas developments to follow with North Mangope, and after that, Machan Gadang and Chera, and we'll look to continue to progress the Bulu and Lango, the Bulu PSC and the Lango gas field within it. We will fund this from cash flow from operations, and I would finalize just saying we are very well positioned both within the Indonesian market, specifically with these gas developments, as we continue to see strong support from the government, strong demand, specifically from the industrial sector and the power generation sector. I look forward to providing more updates, and should you have any questions, please don't hesitate to reach out via the emails provided in our presentations and our press releases. Thank you and have a good day.